Hello traders, and welcome to another video review. Today is Tuesday, April 11th, 2023. Let's find out what's going on the Forex economic calendar today. Not very important data are being published today. Only one is here, as you can see, with 3 green dots. Nevertheless, some of the data had been published already. BRC Retail Sales Monitor from the UK for the month of March was in line with the previous reading, but beats the expectations of 4.2% with the actual reading of 4.9%. Westpac consumer sentiment and NAB business confidence data from the Australia had been published overnight, and both of them were better than expected. So we will take a look at the Australian dollar chart later on. Retail sales data from the Eurozone are scheduled for release at 11 a.m. and this data are expected to drop from 0.3% to minus 0.8%. During the New York session, we got WASDE report. Then we have the EIA short-term energy outlook, and this is the most important event for today. This event is scheduled at 6 p.m. as well. Then we have some speeches from the FOMC member Harker at 10 p.m. and 30 minutes after we got the API weekly crude oil stock changes. So not really full of the important data release New York session. So it looks like it looks like a very steady day for the middle of the week trading conditions. So let's first find out what's going on with the Australian dollar. Let's switch to the Australian dollar to the American dollar chart. This is the 4-hour chart of the Australian dollar to the US dollar, and what do we see here is, as you can see, very nice bounce from the recent lows made at the level of, let me just take a look with the magnet to be precise, 6,622. That's just below the technical support located at 6,628, and right now the market is bouncing slightly. It's not a big deal right now, so let's just wait. I've just marked the important technical support, 6,567. Let me just make it a little bit bigger. So what do we have now? It's a bounce towards the 50 periods moving average, and as you can see, just below it there is a 100 periods moving average on a 4-hour chart. So this is very nice V-shape kind of a pullback, kind of a reversal. Nevertheless, please notice the fact that there is still long road to the for the bulls. What do we see here is some sort of the Fibonacci retracement level, so I'm not quite sure if that would be okay. No, it's obviously other way around, so let me just move it quickly in the correct levels. There you go, you have this here, and we are almost hit the 38% of the Fibonacci retracement. This level is located at 6,690. So basically this whole area here, let me just find a rectangle. There you go. This whole area here will act as a resistance for the market participants, so please bear this in mind, that this zone here will be that there should be increased volatility, especially from the bears around those level here just above and below the simply moving average. If you want to know more, then let me just make the price label here. This is 6,093 and the other level is around let me just take a look, 6,709. So those are the two levels where the increased volatility should be expected, especially from the bears, because we got the 38% moving average, we got the technical resistance, we got the 38% retracement level. So somewhere around, there you go, somewhere around here we should see some movement in the market, I guess, because it's kind of a area where the bears will make a pressure. So this zone might see some sort of the pullback to the downside. The momentum is bouncing from the almost from the extremely oversold conditions. Right now it's a level of 50, so this area here will likely produce a movement to the downside. The odds for this movement are simply bigger, just because the level of 50 is the neutral level, so we might drop down again. Any breakout higher will opens the road towards 61% of the Fibonacci retracement, 6,730, and even towards 78% of the Fibonacci retracement, 6,759. So it's worth to keep an eye on the Australian dollar today. The other data for today are the crude oil, for example. So let's take a look at the crude oil. The crude oil data are very much welcome today. API crude oil data, of course, in form of this release. And what do we have here? We have here the high from the beginning of the March. This is March 7th, and as you can see, this level is 80.93. that's the March 7th. This is another high, but that high is from the February 13th. Let's just move a little bit further, and this we have the 23rd of the January. This high is interesting as well. I'm tell you why I'm doing this here. This high is 82.62. Let's place the level on the chart. And anything here? I don't think so. No, this is the January, this is December 2021. So basically that level 82.62 is the highest price for the crude oil in 2023. We still have the gap here. Okay, so let's see, let's do the gap, and the gap should be made like this. So that's the gap. I will make it so it's a up guide, up gap. So it's a green. There you go, green box, because it's a gap between, there is a high of 75.71. We can even do the gap higher to the open, so that's the 79.81. so that's the gap. The market tried to fill the gap, the downside. It didn't work. So far the lowest level is $79, and this level will act as the technical support. Let me just point out that these levels are very, very important for the bears. Let's just make it again, let's just make it very, very thick, and these levels are the key levels to the upside. So as you can see, bears are defending these levels, and if we'll not break above these levels, then we can see a massive down movement covering the gap towards 75.71 and even lower. For now, however, this gap up is telling us that the oil prices should run. There is a potential for the bullish run. The odds are high, but for now we are consolidating just below the key resistance area or key supply zone, and only if we break above this level, the up move might be continued. So last but not least, let's take a look at the Bitcoin, because Bitcoin is finally breaking to the upside. This level here, the highs of the last day of the March, will act as the technical support right now, and as you can see, we are breaking higher quite significantly. Nevertheless, it's worth to notice that the price of the Bitcoin on the 4-hour chart is now extremely overbought, 81 points on the scoreboard of the RSI. So we should expect this market to move to pull back a little bit before it will continue the up move. It's all in line with our scenario. Our scenario was that the market will be moving to the upside after this consolidation is done. This is still not the final level for the Bitcoin. There's plenty more to come very soon, so we should be prepared for the market to give us another wave to the upside very soon. I'm talking about the Bitcoin market. Everything according to the plan. The trend is up, the trend is intact. No indication of the trend reversal or termination on the Bitcoin in the short term, and apparently right now in the mid term. That's everything from me for today. Thank you very much for watching this analysis, and I hope we will see each other tomorrow. For now, take care and bye bye.